We're going to be talking about the markets and how foreign investors are looking at India at this point. Hans Goetti, independent consultant, joins us from our studios in Singapore. Hans, thank you so much indeed for joining us. How do you think the Indian market is positioned at this point in time? The Sensex in dollar terms is up nearly 30% so far this year. And we have seen significant interest by foreign investors, although they've been selling over the last several months. Do you see the tide turning?
Well, I think the tide has turned in favor of emerging markets about 1.5 years ago. And of course, India is very much part of that. In our view, India is a key element in the emerging market universe. First of all, in India, you have the fastest growing economy in the world. Secondly, you have very favorable demographics. And thirdly, you have a government which is business friendly and reform minded. And that's all we need to know. I mean, we're invested in India for the next 3 to 5 years or even longer. And it's still a very interesting investment story and remains that way despite seemingly high valuations.
Hans, on the macro front, there are conflicting data points, conflicting stories playing out as well. One is that we're not entirely sure how growth will play out from here, most expected to actually rebound. But on the other hand, higher oil prices could prove to be a negative for India's macros. Do any of those play into your mind and your investment decision into India?
Well, I would think we had a bit of a growth slowdown. We would expect that to pick up again. One of the key elements, as you say, is the oil price. And as of late, we have always been a bit, neutral on oil over the past few months. In fact, oil has been locked into a trading range. If you're talking about the WTI, for instance, has been in a trading range between 42 and 55 pretty much over the past 18 months. Now we're getting to the upper end of that trading range, and some of the fundamentals seem to have changed a little bit. We have less production coming out of the United States, or at least a plateauing of production from the oil shale producers in the US. And at the same time, you have an OPEC agreement which seems to be holding and seems to be extended beyond March 2018. So that provides a backdrop for oil that is slightly more constructive than what we have been over the past, what we have seen over the past 12 months. So we would turn bullish on oil if oil was able to break out above the 55 level. Again, I'm talking about the WTI. Brent is already at 60. So 55 on the WTI or higher would make us look a little bit more bullish for the next few months.
Just about valuations once again, Hans. Many investors that we speak to believe, and they say that many stocks across the board in India have run too fast. What's your own reading? Do you think there are still pockets of the market that are still attractive from a price standpoint?
I would think so. We just talked about oil prices. And have been low for a long time. I think the energy sector looks attractive. We think financials look attractive. But again, valuations, you can argue whether they're high or low or whatever. I mean, we had valuations in India always a little bit on the high side compared to the rest of the emerging markets universe. You have high valuations in the United States, and yet the markets make new highs almost on a daily basis. So valuations, yes, they matter in the long run, but they're usually a very poor trading tool, so markets can remain overvalued for a very, very long time.
Hans, how does India compare to some of its Asian peers, whether it's Indonesia, South Korea, some of the other sort of typical destinations for foreign money? How does India compare to some of those?
Well, India is clearly a domestic story for global investors, whereas economies like Taiwan or Korea clearly tie into the expansion of interregional trade, exports, global supply chain. We have seen an increase in exports, a considerable increase actually. So, these markets are attractive for various reasons. We like Korea, we like Taiwan, we like India, again, for different reasons. But overall, the tide has turned in favor of emerging markets. I mean, emerging markets underperformed for about 3 or 4 years since 2011 because the growth differential between developed and emerging economies was in favor of developed economies, and that has now flipped. And once you have growth differentials in favor of emerging markets, they tend to outperform, not just for a few months, but for a number of years. And that's how we are positioned here. We like emerging markets in the context of a global investment.
So given what you're saying, how do you then feel about Indian bonds? We've seen bonds battered over the last couple of weeks. on the back of government announcement as well. And there is expectation in the market that there will be fresh supply coming in. And do you expect to be bearish on bonds while you're bullish on stocks?
Well, probably more bullish on stocks than on bonds. Again, we had the bank bailout, and I think that we have a lot of issuance of bonds as a result there. But again, you have decent yields, and if you compare internationally across the board, Indian bonds are still attractive, but we remain more bullish on equities than on bonds.